That's wonderful. That's wonderful, man. That's wonderful. So I just want to let me before I share my screen. Okay. So I hope you are doing well, Mr. Tristan, and
Yes,
welcome to the class. I didn't officially welcome you to the class because of certain inconveniences, but I think yeah, welcome to the class. Welcome to the class. This is where
thank you.
money is downloaded. This is where we download money. So
Yes,
welcome. You said you're from which nation once again?
I'm in the Netherlands, in
Wow,
Europe.
wow.
Yes,
That's wonderful, man. That's wonderful. Uh,
yes.
so where did you hear about this trading thing?
Well, I to begin with, I never, since I was like 14 years old, I saw some friends playing on the charts, drawing lines, and yes, as I got older, I wanted to earn some extra money, and I started to looking into different business models, right?
Yeah.
And yeah, so I began drop shipping, and due to some issues, I'm not drop shipping anymore. And just some way, I got on a path of trading to through a friend of mine. And also during that time, we were talking a lot about emotions. I read a book about your subconscious mind and your conscious behavior, etc., etc. In that field, and there wasn't any. I could relate it actually to trading a lot because I know a lot of people talking about emotions and stuff like that in trading, but I didn't find a lot of videos from traders talking about like manage your emotions and like program your subconscious mind like it already happened and stuff like that. Until I came across one of your videos. That was I think 2 months ago, and I just put the notifications on so I could where when you post the next one. So I think it was analysis you did on Boom 500, and I went to watch the video and I said, let me just join the Discord, and that was the night that I just called you, and yeah, here I am.
Wonderful,
Yes,
wonderful,
here I am, man.
wonderful. That's a wonderful thing. That's a wonderful thing. So I think you are someone who at least you have an understanding of what we are doing and how we do what we do because uh,
Yes,
for you to have come across it's different. It's a different case if ever someone referred you, and it's also a different case if ever you actually got to find us on your own. That's a whole different case scenario.
yeah,
So our mentorship program it's a lifetime mentorship. It's
okay,
actually different from the majority of mentorship classes that you can ever get out there, whereby people they can say we train you for 3 months, we train you for 6 months, we train you for a year. Our mentorship program it's a lifetime mentorship. Why? Because of the nature of knowledge and the nature of how we know that information is so progressive. Like I always tell the students that information there's no end to learning in this
yes,
trading space. There's no end. There's no day that I'll ever say, guys, we're finally ended, we're finally finished, or we are done. There's nothing
yes,
like that. There's nothing like that. If
yes,
there's someone who is saying that's a complete lie because there's no end to say we're finally
yes,
ended. We're always going to go deeper and deeper and deeper as the knowledge is going to be revealed. We're going to be going
yes,
deeper and deeper up until people they. So it's all a matter of we'll be realizing consistent profitability as we'll be going. You realize that each and every time we're going to be releasing new information, it's actually going to bring you closer and closer and closer to more consistent profitability than before because of the nature of the advanced information that you'll be getting after the previous information. So the whole goal is to make sure that your entries are refined because once we refine your entries, we know that you are going to realize consistent profitability better and much faster than before. You get my point?
Huh, you just the last I didn't hear the last sentence.
Okay, I said the purpose the purpose of us going deeper and deeper with the mentorship program is so that you realize consistent profitability and so that you realize
Yes,
you actually refine your entries, and you are actually more accurate in your observation and in your analysis.
Yes, yes, I think that's also the goal, right? To be
That's
able to
that's the goal. That's the end
yeah,
goal.
not to be able to like just take chances, but know like a little bit predictability, right? So
Yes.
I think that's the fun in it when you're when you're profitable on a consistent basis.
Wonderful, wonderful.
Yes.
Are you on your laptop there, or you're using your phone, or what?
No, no, no. I'm on my laptop right now, so I have my
Okay,
screen already
can you
set
share
up.
your screen? You can share your screen so that you share
Of
with me
course.
what you've understood so far, the questions that you have so far. Then I will bring
Okay.
clarity to what
It
you.
is. I think you need to enable for me to share my screen because it's disabled.
Okay, okay. Let me. Right, it's done.
Okay. Can you see my screen now?
Yes.
Okay. So I was going throughout the videos. I was stuck at day 3 because I had a couple of questions, and I made some analysis on the swing highs, swing lows, etc., and all of the things that you covered. For example, the chart patterns, identifying the areas. That's also a question I have about those.
Okay.
So for now, what the knowledge I have gained by watching the videos are just the candlestick patterns when they're bullish, bearish. I understand when how the candles open and close, and the strength of the buyers, the strength of the sellers, and a little bit of the psychology side of let's say candlesticks, right?
Okay.
And yeah, and also trends, sideways trends. And last time I sent you a picture of this, and you told me that these are like the intervals or something like that, right?
Okay. So when it comes to those ones, they are actually internal levels and the external levels.
Internal level, yes,
So you
that
need
was the word.
to know which one is the correct swing high or the correct swing low.
Okay.
Yes. So let
Uh,
so you can proceed so that I'll just
oh no, no, yeah, it was only, that was my question to begin with. Which are like, because when you have like the chart like this, you have a lot of information. And what is the important information for you to continue it, and maybe to build build a plan for you to get maybe an entry and a stop loss or something like that to make some profit? What do you start looking at when you just see like a blank price, a naked price action?
okay, let me share my screen.
Okay,
Right. Can you see my screen?
1 second. Let me stop sharing.
Let me go to Crash 500.
Yes, I can see. I can see your screen.
Right. So the first thing that you do when you go to any chart, whether it's you're trading currencies, you're trading commodities, you're trading whatever stocks or futures, whatever chart that you're on, the first thing that you do, you go to the highest time frame. In this case, the only highest time frame that we have is the daily. This
Yes,
particular trading view deriv, it doesn't offer the weekly and the monthly. I don't know why. But if ever it was offering those, you could have actually gone to even the weekly and the monthly. The purpose of going
yes,
there is to see the rough overall bias of what is happening on the weekly, on the monthly. You understand? You discover that
yes,
let's say on the daily or on the 4 hour on this lower time frames, you find out that we are in an uptrend, right? You realize that
yes,
that uptrend, when we are now looking at it from a weekly or a monthly perspective, it would be either one or two candles. Like either it was if it's a bullish candle, let's say it was a breakout, maybe let's say this was a resistance. Maybe it's a breakout and retest and the continuation, right? So this can be one
yes,
candle, this can be one candle, then this one can be one candle. So that is on the weekly time frames. There won't be so many candles. That's why it's so good for sometimes to go there just to have a rough bias of roughly what is most probably happening. When you now go to lower time frames, those lower time frames, they now must conform to what is happening on the higher time frames. Right? So
Okay.
once we are on the daily like this, your chart is blank, there's nothing there on the chart. Right. Another thing that I need to tell you about this tradingview.deriv. If you want to put these icons here on the screen, like what I have here, right?
Yes.
Yes, you just go to the icon that you want to put on the screen, right? Let's say I want to put this ray. I just click here, add to favorites. When I click add to favorites, it will appear there.
Oh, that is much easier because I was still going to the left and just selecting and deselecting stuff.
So once I've done that, I can actually use my full screen like this because these are now
Yes.
on the screen like this.
Yes.
Right.
Okay.
So when it's like this, when your chart is like this, the most important thing is to identify the overall trend. The overall trend. This is you identifying the major external swing highs and swing lows. You might not need to go all the way to history. History, you can simply go there when you're back testing. Back testing is when you're just looking at your strategy and looking at how effective it was, how you could have entered trades if ever you were taking trades back then, right?
Okay. Yes.
But if ever we're in the current moment like now, you can just consider the current market price, which is roughly, I can say, this particular region. This is the current zone that we're much more interested in, right?
Yes. Yes. Of course.
Right.
Yes.
So once we now have our current zone of focus, we now need to identify where is our swing high. You can actually see that this was a lower high, because it was lower than this one.
Yes.
This one is the extreme lower low. The lowest point before the push up, that's the lower low. Then the lower high is that highest point before the market went on to break the swing low. So
Yes.
you were saying lower high, lower low. These are the major levels. In between this lower high and this lower low, there will be this movement that is happening in between here. This is what we call internal structure. You realize that in between here, on a lower time frame, it will be downtrending. And
Okay.
as it will be downtrending, it will also be giving you those internal structure, lower highs and lower lows. You'll be having this.
So so right now we are on the 1 day candle charts, and we're doing like to have a to what is happening, right? So we have a roughly idea, if I understand correctly.
Yes.
And that's why we can see that it's in a downtrend, because the major highs and lows, it needs to be lower than the previous low.
Yes.
And in between of those, like the lower high and the lower low, you have like what you just called internal structures.
Yes.
Okay, no problem. Yes, I understand that.
So as going forward, you realize that we want also this is a lower low. This one.
Mhm.
This one is your lower high. Right?
Yes.
So after we have that, you realize that this low was broken. This low was also broken. How do you confirm that this is a lower high? A lower high must break the lower low.
Yes.
That's how you confirm that that's a major lower high. So that's our major lower high. Where is our next lower low? Is this one. So now we are coming from a lower low. As coming from a lower low, remember the overall structure is still bearish. It's still bearish. We can actually try to draw some trend lines there. Just following that current structure. If you realize the market is it's almost, or let me do this.
Does the trend line need to touch the swing highs and the swing low?
Not really. The trend line, the more the number of touches, the better.
Okay.
So in this case, I chose this point. Why? Because this point is catering for most of the touches here, unlike this point.
Yes.
So that's my line there. Here at the bottom, I can put this one. If
So
you
the more
notice,
it touches the line, the better.
the better. So if you
Oh,
notice here at the bottom, first touch, second touch. The second touch is to confirm that. So in this case, this trend line here is acting as a support. This one is acting as a resistance because it restricts the price from going higher above it. This one, it's supporting price to go above it, right? So first touch, second touch, third touch, this is your entry. This was a buy entry, right? Obviously, you use confirmations on lower time frames. On lower time frames, you realize that that same third touch, you could have also gotten another internal trend line breakout on a lower time frame. You could have actually
yes.
gotten an internal breakout, right? So here at the top, this is our resistance. First touch, second touch, third touch here. This was a selling opportunity. This selling opportunity now, it's a high probability entry. Why? The overall trend is still bearish. Number one. Number two, it's a third trend line touch. Number three, that's a sell. And when we're in a bearish market or in a downtrending market, the sells are high probability entries.
Okay.
If it was a high probability entry, you would have targeted this lower low here as your major target for this sell that you take here. Because you're expecting, if ever it's a lower high, just to come and break the lower low. So in this case, our lower low is this. And the market is almost on our trend line, right?
Yes.
Almost on our trend line here. You can see that this is a resistance. The market broke above, retested above, came, broke below, retested the first time, second time. So here we are there. We are just below the resistance. We are also having a trend line. And remember, the overall trend is still what? Bearish.
Bearish.
So we can actually predict now. We can actually predict what is most probably going to happen.
Okay. So before we continue, for me to just understand this,
Yes.
right now we have an overall roughly what's happening, and we know that's it. But we know that it's bearish.
Yes.
And right now we are like looking within the bearish market for opportunities, right?
Yes.
And we are looking at the internal structures for new trend lines and new support and resistance levels, if I understand correctly.
Yes, the purpose of internal structure is also for you to identify entry points, especially when you're now going down to lower time frames. The main analysis must happen on the daily and the 4 hour. That's where your main analysis must be. Daily, 4 hour, that's where you must have your main structure, your main analysis. When you're going down lower, 1 hour, 30 minutes, 15 minutes, you are simply going down there for an entry point. And those entry points, you only enter them using the structures that you have on the 4 hour and the daily. For example, in this case, you can see that on the daily, there's a resistance, right? Most probably this market is going back here to form maybe something like a double top. A double top, if ever you have reached that webinar, a double top is a reversal pattern. If ever the market was going up, before it reverses to start to go down, it gives you some reversal patterns. Reversal patterns, there's a double top, there's a triple top, there's a head and shoulder. All those three are just examples of reversal patterns. Before it doesn't go down in a straight line. Let's say it was going up. Let's say we're going up, up. Before it goes down, it doesn't just go down in a straight leg like this. Like this. It doesn't go down in a straight line, right?
Yes.
Because it wants to build stability and momentum for it to go down. Because if ever we're going up for a very long time, it means pressure has been going up. So in order for us to start going down, we have to create momentum and pressure enough now to break and start going down. And in order to create that momentum, that's where you have those reversal patterns, something like your double top, whereby you have the first leg comes down, goes back up. As it goes back up, you realize that it will most probably fail to break this high. That's the first sign of weakness. When we fail to establish higher highs. In this case, if you go to a lower time frame, you realize that this was higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So here in this case, if we have to go down, it has to fail to establish a higher high. Now, that's point number one. That's the first sign of reversal. Failure to establish a higher high. That's the first sign that we are about to reverse. Failure to establish a higher high. The second sign or the second confirmation or the second confluence that we're now going down is when we now break this internal higher low. Remember, as we're going up, we're forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. First sign, we fail to break this
higher high.
Yes. Second sign, we break now. We break this higher low. Breaking that higher low, we are establishing a low that is lower than this, which is now what we call a lower low. And when it's now a lower low, this market is now going down. It's a lower low. We're now forming a new structure now. Lower low, lower high. Lower low, lower high. Lower low, lower high.
How do you call that point at the top where the second one did not reach the higher high? Is that a break? You call that a break, right?
Which one?
Like you see when you have higher high, higher low, higher high, higher low, and the higher high did not reach the previous higher high, and that's when we see we have a lower low. How do you call that field right there? Is that the break?
This one here.
Yes, like that. When it doesn't reach the higher high. Do you call that a reversal or break or something?
That's a reversal point or a turning point.
Okay.
That's a reversal point or turning point. Whereby, and most of the times it will come, the body of the candle, it won't close above. It can come and the tail of the candle might come above. That's not a breakout. So it will come, the tail might be above, but the body will be below. It's still the same thing. So those are, in this case, when we are going up, you need to make sure that you identify the proper entry points as we are going up. The proper entry points are either your higher lows or these break and retest of the previous levels. These are your entry points because we'll be going up. You can also use trend lines and other further confluences to identify those entry points. So the same thing that we do when you're going up is the same thing that you also do when you're going down. It's just the opposite. So in this case, this is our current structure, right? I want now to us to go down to 4 hour. Let's go down to 4 hour. Let me show you how you can actually further analyze or further go deeper with your analysis on the 4 hour. So on the 4 hour, you realize that this top here, I say, if you notice, this is a double top, a practical example of what I'm talking about now. Here, we're going higher highs, higher lows, higher highs, higher lows. This is your internal structure, right?
Yes.
Higher highs, higher lows, higher high, higher low. Then here, check what happened. We failed to establish a higher high. That failure was the first sign of reversal. The second sign is the break of the internal higher low. And once our internal higher low is broken, we know that the market, it will now just be pushing. These are now swing moves now. Swing moves going down. So let me just increase this. Okay, so that you see it properly. Right. So this is how it was moving. So you notice that even the length of the swing, they differ. The length of the swing, they differ. If you notice here, when we're going up, the swings were very, very, very short. Higher high, higher low, higher high, higher low, higher high, higher low. They were very short compared to when we're now going down. When we're now going down, they are now longer swings. Why are they now longer? It's because remember the overall higher time frame momentum is bearish on the higher time frame.
Yes.
We're still establishing those swing lows and swing highs, those external swing lower highs and swing lower lows. So this also goes to show you the momentum. Where is the momentum? Where is the strength? The strength is to the downside. So here in this case, how could you have entered this cell? You could have entered this cell here at the top, there at the double top. At the double top here, you could have placed your turning point there, your turning point line there. Where is your entry? You just wait for the market to come and reject. You wait for the market to come and tap onto the turning point line. Once it taps into the turning point line, wait for the rejection. Once the rejection happens, you enter on the next candle, your stop loss just above the zone.
So you enter the right. Can you show me again where you would enter?
You enter, you wait for this rejection. Obviously, when you're now entering either on 1 hour or 30 minutes, it will be actually earlier. It will be earlier than on the 4 hour. On the 4 hour, you can wait for this. Then you enter immediately upon the open of this candle. Upon the open of this candle, I think it opened here, just above there. There, your stop loss is just above there like this.
Okay.
Right. So this was a very, very good trade. Then when it comes to targets as well, you can simply use either you are using overall structure. If you want to hold longer, you can use either your overall structure, or if ever you want to be conservative and to make sure that you are taking as much profits as possible, you can also use these 4-hour levels. For example, these 4-hour lows here. These 4-hour lows, I'm referring to this. This first low can be your first target. Second target can be this. If you notice, first target and second target were both reached. This is 4-hour. This was almost like, I think, 2 days or 3 days of holding just from day to day. It was a very good swing trade.
I have a quick question.
Yes.
Because we bought right there. Is this but this is going downside, right?
Yes.
So are you now shorting, if I understand correctly?
Where?
Because you entered the trade right there.
Here at the top.
At
Yes.
the top.
Yes.
And it's going to the bottom.
Yes.
And where do you take profit in?
Like these lows that I'm showing you. This first low.
Yeah.
Remember, this is a higher low. Previous also, it's also a higher low. That previous higher low can be your first target. Second target is this one. This one you can use it as your third target. Fourth target, as we go on and on and on and on. Like this.
Oh, yeah, I understand right now, yes.
Like this. You get my point?
Yeah, yes.
You notice in this case, almost all these targets are reached. From this is, remember, this is a lower low, right?
Yes.
Of which a lower low, that's our major target according to a higher time frame, right? So here in this case, almost all of the targets that I marked were actually reached. If you notice, the market came all the way and reached them here. So in this case, you could have taken this first trade, you could have held for 3 days, you could have made money in those 3 days. This pullback, it was pulling back to establish a lower high, a high that is lower than this one.
Yes.
That is now internal structure now, right? So
yes,
there as well, you will notice that as it was going up, if you go down to lower time frames, your 1 hour or your 30 minutes, you realize that as it was going up, you would have drawn some form of an uptrending channel like that. So that uptrending channel was going to be your headlight to sell upon the breakout of that uptrending channel. Let's go down to a lower time frame and you'll see exactly what I'm talking about. So you will notice that your analysis, once you make sure that your analysis, you're starting it from the higher time frames. These lower time frames, you're just going there for further confirmations, especially for entry confirmations. For example, in this case, you will notice that even here, let's say you wanted to take part in this buy reversal, right?
Yes.
You can even draw a trend line from the top there, coming down.
So you keep on, the lower you go, the more actually you can see what is happening in the short term, right?
Yes.
And you can actually then put some, identify some trend lines and maybe take some possible trades.
Yes. For example, in this case,
Okay.
you realize that after you've drawn your trend line like this, for example, first touch, second touch there, you know that so long my trend line is still being respected, for example, this was the second touch, so long we are below this trend line, you know that my sales are still safe up until here. When this trend line was broken here, you know that this market is now going up. That's another sign to show you that we are now going to the opposite direction. In this case, it was now going to the upside. And as it was going to the upside, you would have also drawn some trend lines going up. First touch here, second touch here. As we're going up, you also realize that upon the break out of that upward channel, you also have a resistance here at the top. Resistance. You see that the market failed to establish higher highs there. Failed the first time, failed the second time. There, the failure. The first failure here, you could have solved. You would have made money here for all these hours. You would have made money targeting this internal level here. You would have actually taken profit here. Your first profit. Just from here to here. Right?
Yes.
The second time it came back to the same level and failed to establish a higher high. It was also an entry opportunity. Your stop loss just above that zone. Your stop loss just above that zone, simply like this. Your targets, you're using the same thing. You can use this first internal level, second internal level, or you can actually use this one. So here you could have used this internal or this other level here. All the levels, they were actually valid. All the levels were actually valid. So you notice that is how you could have actually entered those cells. Then all these reversals is the same thing. All these reversals, they always come in a form of an uptrending nature reversals. You should not notice. This is sort of like an upward channel. The breakout of the channel, that's your entry opportunity. Because remember, according to our analysis on the daily, according to our analysis on the higher time frame, this market is still a bearish market. And if it's a bearish market, it means we are still going to continue push down and down and down for a very long time, up until those levels that we marked on the daily have been reached.
Okay.
So in this case, our level here is this lower low. That was our level.
Yes.
Yes. So long this level is not yet reached, the market will go push, give a form of a pullback, push, pullback, push, pullback up until it reaches the level. So it means going down with it, you can actually go down with it, waiting for that push. That push, once it reaches certain internal level targets, you actually take profits. Pull back, you actually wait for the pullback to break out. Once the pullback breaks out, you can actually enter your next phase of sales. In this case, this was the pullback. This was the pullback reversal, right? Pullback reversal. Pullback reversal. Where was it broken? Here we're going higher highs, higher lows, higher highs, higher lows. Here, then we came to a certain zone where the market internally was failing to break a certain zone. It established this resistance. If you notice this level here, the market came, failed to break, came, failed to break, failed to break, failed to break. So all of that failure to break up, those are actually entry signs. Because remember, we are still in a bearish market. So it means all those are opportunities. That was an opportunity, as well as the breakout which actually happened here. You could have also either entered there or entered here upon the breakout. The stop loss just above there. Then here, your target, when you're entering such a breakout like that, your target, you can actually place your final target here upon the leg of this reversal. This reversal, the leg of that reversal is this one. So this trade, you could have actually held all the way from the breakout all the way to the leg where that reversal started. This is where the reversal started.
Okay.
So even here, you notice that this was a certain type of a range whereby the market was consolidating in one place
Yes.
with a high there and a low here. It's the same thing with those reversal channels. This one, you just wait
You
for the
don't
breakout.
you don't trade in those ranges, right?
You don't trade inside the range. You wait for the breakout of the range.
Okay.
Stop loss and the targets now, if you notice here to the left here, immediate left, there's nothing here that can direct you for the targets. That's why you need to zoom out now and go to a higher time frame. In this case, this was our higher time frame leg. So it means you would have actually targeted this one as your target. It was still money. So if you notice, all the way from that lower high up until we broke that lower low, there were so many selling opportunities. So many selling entry opportunities. If you missed that first one, if you missed this first one, there was the second one. If you missed this one, there was this one. If you missed this one, there was this one. If you missed this one, there was this one. So this was like from 31 May up until June. It was almost like 1 month of the market pushing in one direction. You would have actually made money in that 1 month, and and it's not like you're trading every day. You're only trading when the opportunity presents itself. For example, in this case, this first opportunity, this second opportunity, third major opportunity, fourth, 5 major opportunities were presented in that 1 month. 5 major opportunities were presented in that 1 month that you could have actually made money on. So in this case, this push here, it's simply a pullback because remember, according to our analysis on the daily, we just showed you that we are at a zone where the market is simply giving a pullback. You can actually draw a major trend line from the bottom here. This can be your first trend line. You can draw a major trend line like that. This can guide you even after its breakout. It can also guide you for some entry opportunities as well. So after that trend line has been drawn, you can actually zoom in. As you zoom in now, you'll notice that we established that high. After establish that high, we broke this internal level. This was, if you notice internal structure, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. We broke this internal
structure.
Yes. Then we established lower low, lower high, lower low. So here it can even come and test this lower high. Comes and test that lower high. That's another entry opportunity.
I think the Zoom meeting is gonna end, right?
Yes. Just like this.
So you can make actually money every day, maybe not every day, but it doesn't matter if the market is going up or down or sideways on the higher time frame, or if you zoom in or go on the lower time frames, it will then be other, like you can like spot higher uptrends